That is your company on a Bitcoin standard. It doesn't matter what price you buy. What matters is you keep buying and you don't sell. When flow goes to zero, stock to flow goes to infinity, the money lasts forever. And as they realize that, Bitcoin is going to demonetize all these other assets. You're going to get a 30x bump as we demonetize gold, but there's no reason why you can't have a 500x increase in today's dollars. A lot of my speeches have been fireside chats or just discussions. And organizers in Prague, they're very thoughtful, and I think they're a bit more organized. And they said, you know, you really should come up with slides. And I thought, slides? So this is my first presentation this year with slides. I'm hoping by the time I finish, you'll conclude there is no second best set of slides.
Michael Saylor gave an excellent presentation about Bitcoin, energy, and the future of humanity in Prague in 2023. He made an excellent presentation, excellent slideshow that is timeless, and it's extremely important if you want to understand why Bitcoin's price in terms of political currencies and everything else is going to go up, as he says, forever, and going to go up, as he says, by many orders of magnitude. In this video, I'm going to be reacting to that presentation, and not only for the purpose of education, hopefully adding additional context to what is an all too short speech, but to encourage you to consider going. See, this was the first conference in Prague in 2023. The second one is in 2024. This year, in June, you can sign up for the conference. I'll be there. I'll give a presentation. Michael will be there. He'll give at least one presentation. You can be there. You can hang out with lots and lots of Bitcoiners, a variety of Bitcoiners from around the world. You can use the link in the description for 10% off. Luke 10 gets you 10% off your ticket. You get another 5% off for a total 15% off if you pay in Bitcoin. So without a further ado, let's get into the presentation here, because there is no second best set of slides.
Without further ado, I'd like to talk about the future of Bitcoin. So let's start with an observation. There is an endless economic war raging worldwide. It has been raging since the beginning of time. It is going on right now. That war is over the redistribution of economic energy, and we call that wealth. But it is all of the money and the power in the world right now. And so we have a nice map of the wealth of the world here. And the question is, how is that wealth being redistributed every single month and every single year? There are three primary drivers. The first driver is government policy. The most powerful actors in the economic war are governments everywhere in the world. They are moving money around. When I use money here, I mean economic energy or wealth. They're redistributing it. The second big driver in this economic war is technology. It's the advent of the Apples and the Googles, and it's electricity, and it's fire, and it's cars, and it's Teslas, and it's AIs. The third driver in this economic war is work. It's all the hard work, it's the competition, it's the energy. When you get up in the morning, you go and you work as hard as you can. Now, sad to say that the government is an order of magnitude more powerful in that economic driver than the technology. And the technology is an order of magnitude more powerful than your work. And I think you understand this. If you work as hard as you can, but without a machine, or you work as hard as you can without the access to a computer, there's only so far you're going to get. Now, I was thinking about Bitcoin and how Bitcoin plays into all this. And you can see in my chart, Bitcoin's about $400 billion of this $900 trillion worth of global wealth. You see gold is 12 trillion, and equities are 115 trillion. It used to be gold was equal to equity. If you go back 50 years, it used to be gold was about equal to equity. So what happened? Well, there's a lot of technology in equity. You know, we talk about gold being a shiny, dead rock, but think about gold mining and think about what technology has done to gold mining in 50 years. Semiconductors don't make it easier to mine gold. Mobile phones don't make it easier to mine gold. right? What's happened in equity? Well, you've got Tesla, you've got Apple, you've got Google, you've got Amazon, you've got the internet, you've got the telephone. So technology has shifted the balance of power from gold to equity. Government policy shifting the balance of power. Look at bonds. Bonds are driven very heavily by government policy. Real estate driven very heavily by government policy because government policy controls capital and cost of debt, and that drives real estate. And of course, there's money over here. So, most important point is the government is changing this field. Technology is changing this field, and you can work as hard as you want, but you're going to have to take into account government policy and technology if you want to actually survive in this world.
I fully agree with that. That basically Bitcoin is a fighter in this kind of economic war. Michael Saylor, myself, and pretty much every other Bitcoiner, all the way back, to Satoshi Howe, basically all of us have been criticized at some point for being too dramatic or too hyperbolic in our speech, right? Oh, economic war, really? Fear mongering via the word war. That connotates violence, conflict. That's just fear mongering. It's just magic internet money, right? And I think the reason, Michael Saylor doesn't choose the word war randomly. It's a very dramatic word, right? I use the word war, or I describe things as war. And I think the important thing to realize for people that may interpret that as unnecessarily provocative or emotional is that the word war is not inaccurate. In fact, I think it's exactly true. Like the whole reason animals have conflict, if you look out in the natural world, like I'm looking right now, if you look outside, you see trees, you see fungi, you see, animals, and then obviously animals around the planet. All of these organisms are competing for energy. Okay, life is an economic war, predator and prey, right? Those two creatures are in a battle, right? They're in a battle for energy right now. The important thing is that energy is not zero sum. The energy accumulation and life itself is not a zero sum game. However, as we build up and up and up, we do need more energy in order to survive, right? And so I think describing history through that lens of energy warfare and economic warfare, I think is really important. And I think that's a huge part that's missing in our educational system, right? Here, I'm in the United States. Our American educational system is funded by the US government. So it should not be a surprise that when you look backwards in time at history, through a political institution teaching that history, you are inherently going to have an overly political bias, and you're going to get the political story of history. You're not going to get the energy or the economic story of history. So when most of us learn about history and all the wars and the big names and the faces and the dates and all that stuff, it doesn't tend to stick because why does it matter? Why should we care, right? And I don't blame the kids that say that, or the adults too, that say that, because if you just learn dates and names and political empires and regimes, it doesn't make any sense. But when you context the wars and the empires, the oppressors and the victims, right? When you context all that in the framing of energy, you begin to understand that for thousands of years in human history, we have had this battle for energy. Here, I have a gold coin. This gold coin here, I use as an example, and I only own this gold coin as a use of example, and until I no longer need the example. But the point is that this gold coin is worth a lot more than what people might expect. The United States government, the political institution of the United States government, will give you $50 for this coin here. That's why it says $50 here. But the actual market value of this coin is not $50 in gold price in terms of US dollars. The actual market price is not $50. It's more like $2,000, 2,000, 2,100, 2,200. Okay. It is many orders of magnitude more valuable than what the government's willing to pay. And likewise, the history we're given has orders of magnitude of disparity in it, right? Because when you're looking at history through the context of politics, it doesn't make sense. Why did this person do that? That seems random. But when you contextualize it in that the empire needs energy and the empire needs to grow and expand to have energy to survive. And so when you look at current politics in America or the globe, people ask all the time, why are things so crazy? Why is the president or this politician or that congressperson or that lobbyist, or why are all these political things happening and they feel so strange than they did 30 years ago? Again, if you are looking at history or you're looking at modern events through the upper layer of politics and not the base layer of energy, you're going to be really confused what's going on. The present doesn't feel like the past. But when you understand that the post-World War II boom. We had a massive amount of energy being created. And then after America, became the de facto reserve currency, right? Which Michael will get to in just a moment. But America became the reserve currency, the dominant form of monetary energy in the world. Then we departed from this. We departed from gold in 1971. And then from there, now we've been slowly transitioning to this new world where we don't have a stable monetary empire, monetary regime to effectively communicate energy with each other. Now we're transitioning to a world where the money is declining, unfortunately, at a faster and faster rate. If you go out and you look at a bird of paradise, right? Someone looking at the bird of paradise from a behavioral standpoint might wonder, why are these birds going to all this elaborate lengths just to dance and move around and have fancy feathers and colors that provide no strategic advantage, right? If you're looking from a behavioral lens, from a surface layer lens, you won't understand. But if you go to a layer deeper and you understand, oh, these birds and animals want to have these colors, have these feathers, do these dances, clean their areas, and do all these elaborate things that you wouldn't expect a bird to do because it's all about energy. If I'm a bird that has the brighter feathers, the larger area, if I can channel more energy, communicate more energy, I can ward off competing birds without having to actually fight them. I can just communicate, hey, look, I've got the energy. I made all these colorful feathers. I can do all these dances just right. You better not attack me, right? It's a more effective way, a more energy efficient way of communicating. Don't take my stuff. Don't take my mate. Don't take my area. Don't take my food, right? Don't harm my babies. And likewise for mating, it's the same idea, right? Why is the female going to go to the very energy extensive length of mating with a bird and, having offspring, if that's not necessarily the male that you want to mate with, right? Have the male do a dance, show his colors, strut his stuff, show you in a more energy efficient way that I'm a sufficient organism for reproducing with, right? And so taking that context, into the economic war of history here, if we're looking at the bird through a behavioral lens or human society through the political lens, we're going to be distorted to thinking they're only political solutions. We're going to be distorted to thinking that they're only political problems we're trying to solve. And that is the fundamental difference between this little yellow coin and this little orange coin, okay? This piece of plastic is worth nothing. It's cheap, okay? This is worth thousands of times more than this. Like literally, like this little Bitcoin plastic is worth nothing, just a few cents. This is worth thousands of dollars. Why? Because it took more energy to produce. It's not a political creation of energy. It's the actual material innovation of energy here. And so that's a really important context when understanding Bitcoin. I'm so glad Michael framed up the conversation this way, to start with the context that if you're going to understand why Bitcoin, a non-political thing, is a solution to these political problems we have, is to understand that the original problems are not political problems at all.
The world reserve currency is the dollar. It's collapsing against assets like the S&P index, like real estate, like gold, like art. And this is a sobering thought. If we had sound money, the dollar wouldn't collapse. But you've probably seen this chart. This is the dollar collapsing against consumer goods. Consumer goods, the dollar is 95% weaker. Means consumer goods are 20 times more expensive today than 100 years ago. Now, consumer goods are manufactured items, candy bars, bottles of water, Netflix videos. They're things that are coming off an assembly line and they're getting stamped out with a low variable cost. This is the cheapest, least scarce stuff in this civilization, and yet it's 20 times more expensive. Now, a lot of times, government officials show you this chart and they say, well, this is the impact of inflation. This, in fact, was generated by the Bureau of Labor Statistics. But the sad fact of the matter is, this is as good as it's ever going to get for you. This is a different picture. What if it wasn't easy to stamp out manufactured biscuits or Netflix videos? What if you had to do work to dig the gold out of the ground? Gold is a bit harder. And so the dollar has collapsed 99% against gold in that same 100 years, not 95%. By the way, gold is not scarce. We keep creating more gold. We get better at it, but at the end of the day, it's a bit more scarce than, Netflix videos, and it's a bit more scarce than drywall. Let's talk about something that's even more scarce. The 500 most valuable companies in the S&P. The US dollar has lost 99.8% of its value against the S&P index over that same 100 years. That is actually a closer measure to the inflation rate. This is the world's strongest currency. This is the currency backed by the country that won every war in the last 100 years. This is as good as it's going to get for you. This is as good as it gets. It will get worse. Now, how do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency.
This is such an important context to have, is pricing things in terms of dollar, and vice versa, right? See, humans are really bad at math intuitively, including myself for that matter, frankly. We are really bad at math. We're really bad at understanding exponential realities. And so when people go on CNBC, when people go on mainstream media, CNN or whatever, or they post articles in whatever legacy finance journal out there, when people go out there, they talk about a store of value. Oh, Bitcoin's not a store of value because it's too volatile. What they're missing is this context of what Michael is describing here, that if you're going to have a store of value, it can't have a stable price because humans are innovative. The world is not static. It is impossible to have a static form of communicating energy in a world with perpetually different forms of communicating energy. Okay, that's like telling the birds that there's a static form of energy when the nature and the dynamics of the ecosystem of the forest are always changing, right? Let's say that, let's have gold. Let's say that the value of gold stays flat, right? Because gold is relatively scarce, it's relatively finite. But the problem is, what happens when humans build more houses? What happens when humans produce more food? What happens when this year there's less cars to be made? What happens when there's less clothes to be made? When there's more or less of something in relation to something that's static, what you're going to have happen is that the purchasing power of that static thing, this gold coin in this case, is actually not static, right? And that's a problem. If you're going to have a store of value cannot be static. Okay, the volatility is inherent because volatility is an inherent part of life, right? And so, unfortunately, what the issuers of American political currency units and political currency units at large would like to have you think is that, store of value equals lack of volatility. It equals a constant. Okay, that's what they would like you to think. And the way that they achieve having you think this is that they do have that volatility and the purchasing power of your currency, but they have it slightly down every year, right? You can't have it go slightly up. You have to have it slightly go down every single year. A 2% inflation rate. That's what's needed. You want the purchasing power of your dollar roughly to be the same this week, next week, next year. And the way that which we can manage that is to debase it a little bit, print it a little bit, make our reserve currency not like gold where it's harder and harder to get more because it's extremely energy intensive, but just produce a little bit more because it costs no energy to put another zero on the end of your ledger here. And so the point is that if you're going to have basically this competition, you have innovation, human innovation, trying to create more and more and more stuff, which is trying to force prices up, trying to increase prices. On the other hand, you have human desire to create more currency units because the more currency units you create this deception of having stable prices, and then people use it. People give you energy. They give you your real energy things for things like plastic that take no energy to produce, right? If you can give me real energy for something that looks the same but took no energy to produce, I'm a happy guy, right? And so the point is that you can't have stable prices with a store of value, right? And so the choice is, do you want a a store value that goes up over time, or do you want to store value that goes down over time? With the US dollar, because it goes down all the time, it forces and incentivizes saving and hoarding of energy in things like gold, in things like equities, like Michael Saylor said, in things like real estate. And that dynamic may change, right? Like Michael said, the ratio between gold and equities is vastly out of balance compared to what it was in the past. So the kind of energy might change depending on what the focus of the economy is. Right now, we have a very tech and software focused economy. That's the focus on equities. If we're going to fast forward or back to a different point in time where that focus may be on more harder or direct forms of energy, like energy companies, let's say, then maybe gold would have the higher value, right? Right now, if you compare the total market cap of tech stocks compared to the entirety of the energy sector, it's dramatic, and it's very telling of where we are in our culture, right? A very digital place. But the underlying point is the same. Humans are creating more energy. And if we're going to have a numerical system communicating the relative value of one form of energy and another, that's inherently going to be volatile as the volatility of global economics and global free market unfolds. So without further ado, let's get back to Saylor's presentation of not just why is the dollar collapsing in terms of everything else, but looking at some charts of how inferior political currencies to the dollar just keep going up and to the right forever.
Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index. I'll let you do the math. If you run a company in Argentina and you're going to work hard, you're going to have to grow your revenues from 1 million pesos to 500 million pesos over 20 years to stand still. And that's why I say no amount of hard work is going to solve the problem of being on the wrong side of an economic war. There's only one strategy here. You have to get out of that peso. You have to exit. This is the lira. This is before this week. It lost 95% of its value. Now the number is about 97% of its value against the dollar. This is the rupee. It's lost 90% of its value against the dollar. So that 99.8% loss is another 90%. So we're kind of running out of numbers to calculate just how much of your wealth has gone from you to the government. When the government actually collapses the currency 99.9%, what it means is over 100 years, they in essence take all of your wealth and they redistribute it to their cronies, to whoever they want. And that's the rate at which it's going. This is Pakistan, 82% against the dollar. This is the Brazilian real, 65% against the dollar. Conclusion. If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable. Right? There are certain things that are scarce and desirable, but they don't move, like beachfront property. And by the way, maintainable, if you own $1 million of property in Miami, you have to pay $20,000 a year, every year, to maintain it, and it gets assessed up. So you have to have $1 million to cover the taxes on $1 million of property in Miami Beach over about 20 years. You can't maintain it. So you're going to be a smart investor. Here's smart investors, people bragging about making money in the stock market. The S&P index is going up 7 to 8% a year. And so you must be really smart. You invested in companies that are making good decisions. Look at the money supply. The money supply is going up at the same rate as the S&P index. And so what you begin to realize is most investment gains aren't really gains at all. All you're doing is simply tracking the monetary inflation rate if you're lucky.
That's an excellent conclusion to have there. And I think that gets to a larger point that people don't even really understand why we accept political currency. Like, why do people use dollars? Why do we use political currencies? It's because this is too expensive to transaction. Okay. This gold coin preserves its purchasing power way more than the US dollar. However, the difference is I can't send a $2 transaction. I'd have to literally cut this coin into 1,000 pieces to buy a cup of coffee or to buy some tea here. It's impossible. Basically you're having to barter like on some sort of credit system atop of the gold, and the gold be the base chain, right? Even though this is better at preserving energy as a function of time, it's horrible at transacting energy across space. And that's why we accept the lie and the deceit and the manipulation of political currency, because it's so much easier to use. And the net benefit and ease of use for us, either in our perception or reality, is worth the energy savings of not having to transact in a harder form of money like that, right? And so it's unpopular, but political currencies are an innovation on previous forms of money, previous forms of currency. Obviously, there are many trade-offs to the downside there, but it is a form of technology. It's a technology. All forms of money are technology, and the technology of political currency basically says, hey, it's too expensive, as Michael says, to transact in Miami beachfront property. It's too expensive to transact in gold day to day. So us, the politicians, with our big armies and with our big, our constitution and our paperwork, with all the energy that we channel, we will create a numerical form of gold, right? So you have the real forms of energy, right? That take energy to produce. Okay, we're going to create a numerical system backed by that, right? And then you can transact on that, and you don't have the extreme expense you're going to have with this, right? The problem, though, is that if I'm the guy that says they're backed 1-to-1, who says they're backed 1-to-1? I do. And who backs that? Oh, the full faith and credit, faith, trust, and credit you have in me, right? The problem is you have a massive incentive to instead than just replace instead of just represent. And that's exactly what happens, right? We're replacing gold with plastic. We're replacing things with extreme energy to produce extremely sound forms of money to extremely unsound forms of money. And the innovation is to bring an extremely ease of use form of money with something that takes extreme amounts of energy to produce, combine it together into something that's actually going to retain its purchasing power and actually be usable for people. Something that does not require a centralized point of political or human oversight to guarantee its scarcity. Something like gold that is going to have its scarcity be extremely expensive to produce, but without the need for human oversight to manage that scarcity or to decree monetary policy. Something that can on its own adjust to the changing economy, adjust to the changing world, and adjust to the changing dynamics of a free market, and be that store of value as a finite and absolute numerical system, a finite ledger, pricing in perpetually more infinite world.
Now let's talk about all the assets. Okay, this is a 30-year or 20-year return on asset classes compiled by J.P. Morgan. On the far right, you see commodities. They're awful. Commodities are silver, gold, natural gas, especially oil, soybeans, lumber, pork bellies. Why are commodities awful? Because humans are really good at creating more of them, and they will drive the price down using technology, ingenuity, and capital. Commodities lose you money. Cash, also pretty awful. Now, you see the inflation rate that the largest bank in the United States marks? They mark it at 2%. That's what the government tells you their inflation rate target is, 2%. That's their consumer inflation rate. That's fake, right? Every single 10 years or every few years, I'll just redefine the market basket of goods, and I'm going to put drywall and manufactured biscuits and Netflix videos and something cheap. You can be sure I take the expensive stuff and I move it out of the consumer basket, and I take cheap stuff and I put it in the consumer basket. And you're moving toward a world where you'll live in a 300 square foot apartment constructed of drywall, sitting on a cheap rickety plastic chair with a set of goggles on, while you imagine yourself in a beautiful universe with a bunch of digital stuff, and you'll get digital healthcare, and you'll get digital entertainment, and you'll have digital friends, and you'll take digital trips to digital vacation destinations in your digital jet. And everything will be good. That's the problem with the CPI. Now, look at the S&P index, right? You feel like you're a genius if you're getting 7.5% against that. Well, what if I told you the real inflation rate of the US dollar over 100 years is about 7.5 to 8%? That's the actual inflation. Now you see the average investor is getting 2.9% when they're smart. Commodities are less. The S&P is underperforming the inflation rate. Look in the far left. What's your best chance? It's called a REIT, Real Estate Investment Trust. If you have a property company and you buy the scarce desirable real estate in the middle of London or New York, and if you can generate a yield on it, and if you're really good at it, you might be able to just barely keep your head above water. But you know, none of these look all that compelling, right? I mean, investment consists of either losing your money fast or losing your money slow, or after 100 years of brilliance, assuming that the government doesn't fail and you don't have your assets seized. And I didn't include taxes. As long as you don't die, you don't have any capital gains, and you don't have any inheritance tax, you might barely just keep what you had 100 years ago in this world.
A lot of people think that we're conspiracy theorists. A lot of people would say what Michael just said is conspiracy theory, that, oh, we're all moving towards a more and more dystopian world, or we're all going to get plugged into some sort of dystopian thing. But I really want to emphasize that it has to get worse. Okay. You have political currency, a system reliant on trust that is not backed one to one. Inherently, there can be no trust. Okay. It is not sound. And so, therefore, in order for it to survive, and with it to survive in the face of an exponentially decaying amount of trust, it requires an exponentially increasing amount of manipulation of information, an amount of manipulation of information of truth, and a slow debasement of energy. It is not accidental, it is not coincidental, and it cannot be reversed. It is inevitable. Okay. To restate what Michael's saying here in a slightly different way is this. The way to think about it is that money is information. The information is not correct. And so the only way to have all of society still go along with the political currency, even though it's not sound, even though it's not information that is no longer 1 + 1 = 2, the only way to have is to manipulate information everywhere else. And that's what, Michael's talking about here with the CPI basket, right? It's not conspiracy theory to say that the government is going to change the basket of goods in someone's lifestyle to have a better CPI print. That's literally what has to happen. And if you don't do it, someone else is going to do it for you, right? Every individual has their own inflation rate. I am here in the United States of America. I have a very different inflation rate than someone down the street. I have an entirely different inflation rate than someone 3 blocks over. I have an even more dramatically different inflation rate than a person across the planet, right? Every single individual has their own needs, their own desires, their own mixed basket of personal goods. And the government picking an arbitrary basket of goods, they're obviously going to pick the lowest ones. They're obviously going to pick the ones that give the perception of the slowest rate of death of their political currency. Okay. And that's really important to keep in mind, that as those things change in that basket, right? In the same way that we've swung from gold to equities and we may swing back to gold, in the same way as that example before, we will swing different assets at different times. And so the government will always add or subtract from their CPI prints what the real basket of goods is this time, right? Here in America, we've had higher than normal inflation since 2020. Okay. The actual inflation rate's been much higher. And people wonder, they say inflation's 8%, but I go to the store and the price of this is doubled, or the price of that, so more like a third or double, or up by 50% or quadruple. Everything's changing at different inflation rates because everything has a changing amount of scarcity, a changing amount of demand, and the currency at which we're pricing those things in is also having a radically changing amount of supply and demand. And so the point here is that if you're trying to communicate to people in that political problem that don't understand that it's they don't understand it's a political problem. They're going to have a hard time understanding that there's no political solution. It has to get worse. Like, there is no way that a political problem is going to willingly or forcefully create a political solution to solve that political problem, right? You have the layer two politics atop of energy. There's a disparity between the two, and that you're not going to have them realign. The only possible fix is to have from the bottom up, okay, from the bottom up, reform everything, right? In the same way that the birds, if we think of the feathers or the dance that they do as the layer two to the energy, being the calories they have, you can't fix the politics until you fix the energy, because the whole industry, and I will call it industry, the whole industry of politics is about channeling energy. And so if it's not back to one, it has to decline. It has to get worse. And that is the point that Michael is pointing out here, that if you're trying to solve a political problem from within a political system, that it's just going to continue to decline. And as Michael said earlier, this is the best it gets. Okay, we have been in the most prosperous time of the most prosperous nation in the planet, the last few decades of the United States of America. And unfortunately, we're having a lot of things change, and that really needs to be kept in mind. And that's why Bitcoin is so important to consider.
Most investors, they just perform poorly because of bad habits. What kind of bad habits? This is a 30-year chart of returns on the S&P index. And this chart tells you that if you missed one day, there's one day every year when 85%, 90% of all of the gains come. One day. And there are 36 hours a year when all investment return takes place. So in 365 days, nothing happens 99.5% of the time. This is why we have the laser eyes. This is why we say hodl. Because, and I have said before, trading Bitcoin is a sign of lesser intellect. If I were to say 1% of the days you could trade successfully, I would be overstating your odds of success. You literally have to find the 24 hours out of 365 days when the market moves, and you will be wrong 99+% of the time if you trade. You're going to sit here and Bitcoin's going to be whatever it's going to be, and then one day you're going to wake up and it's going to double. And if you miss that day, you're going to be kicking yourself. HODL, don't trade. Most people destroy themselves by thinking that they actually can time the market. This is a chart as of about a month ago, and what it shows is year to date, 1% of the companies in the S&P index had all the gain. If you look at this chart this week, there are 493 companies in the S&P index that have collectively 0% return, and there are 7 that have 50% return. And another way to say that is 99% of the companies cannot keep up with inflation. You think you're going to pick stocks? You're going to pick the winner? There's a 99% chance you won't. And maybe there's a bigger idea here, which is if you have one of the greatest companies in the world, there's a 99% chance after 100 years of being great, you still can't keep up with inflation. And this is why I say maybe your hard work doesn't matter as much as government policy matters. You're not going to find the winner 99% of the time. And you remember I've said before, diversification, it's selling the winner to buy the loser. Right? All these really brilliant investors that diversify, if they're smart enough to buy Apple or Amazon, when they diversify, they go from 44% return to 10% return. And if you manage to get it right, you may be the 0% return.
That is extremely controversial to people that are not in Bitcoin. I like, oh, diversification is bad. What are you talking about? Diversification is important. My financial advisor says diversification is important. Just intuitively, diversification makes important. I don't know the future. Why should I be so arrogant and so overconfident to be all in on something when I don't even know what's going to happen tomorrow? Right? Good point. Now, to give some more context, to that point that you're saying, that's very valid, and to what Michael is saying here, the point is, in the modern world, our money is not attached. Our political currency is not attached to something with real energy to create. We can just create more zeros, right? Granted, we sometimes create zeros a little slower than other times, but we're always going to create more political currency. And so you have to own something for your retirement, for your kids, for your future, something that's going to hold its purchasing power over time. Michael just made that point very well. And when you don't know the future of that complicated world of the macroeconomic, you don't know what wars are going to start. You don't know what trade routes are going to be created or destroyed. You don't know what's going to change in the world. You don't know what innovations are going to happen. You don't know what companies are going to go bust. And so the only way to operate in a world without money that takes energy to survive is to diversify into a mixed basket of goods that do require energy to produce and save in that. Right now, in the modern world in 2024, we do that in a few different ways. One way is gold, one way is real estate, another is bonds, and another is corporate stock, right? Corporate stock takes energy to produce. Yes, it's ones and zeros, but it's backed at least a little more directly to corporate energy. You're backed by the earnings of that stock, right? Price to earnings ratio, PE ratio, right? Gold obviously takes energy because you have to mine it out of the ground. Obviously, it takes energy to produce. Real estate takes time to build. Diamonds, you have to either create or dig out of the ground, right? Same with silver, same with everything else, right? Bonds also, I won't get into bonds, but the point is all of these things take energy to produce. And because you don't have any form of money, you're creating a mixed basket of things that do require energy. You're trying to recreate this. That's what you're trying to do. This world in the early 21st century where people diversified a mixed basket portfolio of commodities and equities and corporate, our government debt. We diversify in that because we're trying to recreate money in a digital form. We don't want to save our life savings in gold because, number one, like I said before, it's hard to transact. And number two, you have a single point of failure. If I'm storing this gold in my house safe and you break in my house, you get the gold, right? Which is why I don't really hold gold long term. And I'm getting rid of this coin pretty soon. But that's the point. That if you hold analog money that does have energy backing it, you have a single point of failure. That is you in your house, right? And likewise, when you have this form of digital money, that's what you're trying to do. You're trying to create a digital money by having a diversified portfolio. And the hope is that the overall returns of that sound or more sound form of digital proxy money by having a diversified portfolio of goods is going to save your energy better than the government created currency that is not just ones and zeros out of thin air, the thing made out of plastic, right? That's the point. That's why we have these portfolios. And that's why the importance of these portfolios has exploded in value over the last 80, 90, 100 years, right? The inflation rate after 1971, when we detached from gold, has become much higher than it was in the 19th century and the early 20th century, even in the United States, right? That's why these investing things have become so important. It's why everyone, especially the last 20 years, has become so focused about trading, about flipping, about these finance gurus and all that is because it's becoming increasingly important to create a digital proxy money with a diversified portfolio of various assets that take energy to produce in a world with the context that the predominant form of digital money is political money is declining and dying and having less energy backing it every single year or having less energy being able to be exchanged for it every single year. And so the point is, yes, diversification makes perfect sense in a world where you don't have Bitcoin. In a world with Bitcoin, diversifying out of it does not make sense. And the reason is because that diversified portfolio of things that take energy to produce, you're basically trying to get an index for the world, right? What's the best you can do? Okay, the biggest government in the world, the biggest country, biggest economy in the world, United States. Okay, let's get American debt. Okay, maybe we get some international debt too. Okay, equities. Let's get the broad index of America's stock market, right? Maybe some international stocks too. Let's get the broadest index of the world human productivity. We possibly can. And that is our form of digital money that then we price in forms of political money. That diversification makes sense. But Bitcoin comes in, and Bitcoin says, I not only have that much diversification, I have more diversification because I can onboard the hundreds of millions of billions of people that are not banked, like you spoiled rich Westerners. Okay. I am 24/7, 365 days a year. No one controls me. All energy. I am the backing of it, right? That's basically what Bitcoin's trying to be. Basically, the S&P 500 or the NASDAQ or the Dow Jones are trying to index American corporate innovation and productivity. Bitcoin is trying to index the entire globe's worth of productivity. So Bitcoin's actually more of that, right? And so the point is that in a world without Bitcoin, diversification makes sense. But Bitcoin is a thing of itself intended to destroy diversification, right? Because that is what you're trying to do with your portfolio. You're trying to create a digital money. Bitcoin is the digital money. And so you no longer have a need for the diversified portfolio of proxy digital finite money, right? It's the same thing with the horse and the locomotive, right? The horse makes perfect sense. The horse is the perfect thing to do in a world where biological means are your form of transportation, right? You don't walk, you don't ride a camel, you ride a horse if you really want to get somewhere. But in a world with a locomotive, in the world with coal and fire and steam, the horse no longer makes sense. Again, it's a technological change. Political currency is a technology. Bitcoin is a new technology. And the innovation, right? People wonder, well, Bitcoin's not faster or cheaper. Why is it better? It's because it's a scarcity and because of its properties. It is that. It is the removal of the need for diversification in of itself. And so hopefully that context makes a bit more sense. And to that point, in regards to Michael's earlier point about trading, you do not trade that. Are you going to trade the index for human productivity and human prosperity? Are you going to go short humanity? Oh, I think humanity's got a less bright future. I don't think, I'm going to go buy gold, right? Because I am going to go out there and with my own capital, I'm going to go out there and buy gold and hoard it because I think that humans aren't productive enough. They aren't ingenious enough and they aren't innovating technology enough that they're going to dig more of this out of the ground. They're not going to dig more of this out of the ground. They're not going to increase supply. That's what you do when you buy any of the assets within that ancient world diversified portfolio. If you're buying houses, you are taking a bet. I don't think humans are innovative enough, have enough ingenuity to build more housing. I'm going to go buy oil because I don't think humans are going to go dig more oil out of the ground and dump more supply in the market. I'm going to go buy diamonds. I'm going to go buy gold. I'm going to go buy corporate equity. In a world where you don't have finite absolute digital scarcity, that makes perfect sense. It's the best you can do. They're the things we can create the slowest. We can innovate and create gold, innovate and create gold much slower than we can create and innovate new political currency, just ones and zeros out of thin air, right? But again, Bitcoin changes that fundamental understanding. And that's unfortunate. Most people, especially in the finance world, don't understand about Bitcoin. I think this is why engineers like Michael Saylor, by the way, engineering background at MIT, it's what the engineers understand from an energy first principle, right? The majority of this whole video so far, my end and Saylor's presentation I'm reacting to, have to do with energy, right? It's not from a portfolio theory finance perspective. It's from that energy perspective. Again, he started his conversation out with there is an economic war. And so if you're going to try to time that, to trade that, I wish you good luck. But as Saylor said, less than 1% of the time in Bitcoin is when the market reprices, right? Because humans are extremely emotional, because information around the planet changes extremely quickly. And what's going to happen is that pricing something that takes energy to produce in terms of a political currency system designed to exponentially decay every single year is going to get harder and harder to do. A lot of people outside of Bitcoin that hear that, oh, wow, Bitcoin, or excuse me, Luke is a Bitcoiner. Wow, it makes you too. Luke, how's your Bitcoin trading going? Luke, how's your, Bitcoin portfolio? People outside don't understand because they're not, again, they're looking at it from a political lens, right? People think I'm trading Bitcoin. I'm not trading Bitcoin. I don't leverage trade Bitcoin. I don't day trade Bitcoin. I don't swing trade Bitcoin. I don't anything trade Bitcoin. I buy Bitcoin and I hold it, right? I would not trade gold. I would not trade diamonds. So why on earth would I trade Bitcoin? My encouragement to you, and I'm going to make this point really clear, is with Bitcoin, I encourage you, number one, learn about Bitcoin and buy some. Number 2, take self-custody and don't have single points of failure. Don't store all your gold under your mattress at home, right? You're transferring single point of failure from someone else to yourself, right? And that does have a variety of risks. Because the point is, once you understand that the main risk is not having Bitcoin, and then once you have it, how are you storing it? You realize, why on earth would I trade it for any other inferior asset, right? And the internet, the big winners for the internet were the people that innovated solutions to monetize the global communications layer of the world, the internet, right? Amazon, Apple, Facebook, Google. They were the big winners. Okay, the way to win financially in the first part of the 21st century up to now was to buy a portion of the internet's monetizable arms. Okay, not trading. Yeah, maybe you could have made money trading. Yeah, maybe you could have money doing this and that. Whatever. The big way to win is buy that, right? The way you can think of Google, the way you can think of Netflix, the way you can think of Amazon, the way to think of them is that they are like layer 2 shares of the internet. The single best trade you could have made at the turn of the century, from the 20th into the 21st century, the single best trade you could have made was buying a portion of the internet. Now, that's not possible. You couldn't have done that, but that would have been the better trade to make. What is the better buy than Google? What is the better buy than Amazon? The better buy is an actual share of the internet, because Google might go bankrupt, Amazon might fade away, but the internet itself is not going anywhere. And that's basically what Bitcoin is, except you're not buying a share of the productivity, ingenuity, innovation of the internet. You're buying that of the whole planet. And that is the opportunity of Bitcoin. It's not that, oh, Bitcoin's going to get you rich quick and you can trade it and sell it, make it for a big fiat profit. It's like, no, Bitcoin is the numerical system pricing in perpetual increased energy for the human race.
So that leads us to the question, what is money? Right, because investment assets aren't working so well. What is money? Well, in theory, money is a way for you to store your economic energy and not have it stolen from you by the government, by a bad investment decision, right? Perfect money is, in fact, the solution to all your problems. But what is good money? Gold has been an aspirational money, but it's defective. And the reason gold is defective is because we keep creating more of it, and you can't custody it. And so if I keep creating 2 or 3% more, then that means that the half-life of your economic energy in gold is 35 years. It means every 35 years, your money is cut in half, or the value of your wealth is cut in half. The only way to make gold perfect is to stop mining it and make it possible to teleport and carry around in your head. And of course, this is not happening with gold. It is difficult to create sound money. How difficult? Well, Bitcoin has gotten 50 trillion times more difficult to mine since it was formed. 50 trillion. Now, what is that telling you? Well, for the money to be sound, I have to cap the supply. And in order to cap the supply, I have to make it exponentially more difficult to create it. And human beings in this small corner of the world, Bitcoiners, who have been ignored, they figured out how to create 50 trillion times more work in those 14 years. That's what you're fighting against. And that's why commodities make awful money. That's why anything that can be produced with human intellect and capital will always be awful money, because you're betting against human intellect. I'm going to actually store my money in something that you can make more of, and I'm going to bet you're too stupid to make more of it. Okay, that's an awful bet. Somebody somewhere with less money than you has a lot of time on their hand to figure out how to get your money. That's why you need something like the difficulty adjustment. And that's why it's so difficult to create sound money. Bitcoin is sound money. Now, people around the world use all sorts of assets in order to store their economic energy. All these monetary assets have a different natural frequency. For example, oil gets produced with a stock-to-flow ratio which is extremely low. The Argentine peso is doubling in supply every 1-2 years. Silver is growing at a fairly rapid rate. When the dollar inflates at 7% a year, that means that over the course of 10 years, you double the supply of the dollars. So therefore, the half-life of money in a dollar is 10 years. As the stock-to-flow ratio goes up, the half-life in the money goes up. The natural frequency slows down. Gold has a half-life of 35 years. Obviously, gold is a better money than the peso. It's a better money than soybeans. But now you see the real key is, what is the natural frequency of the asset? And what's brilliant about Bitcoin is it started with a higher frequency, but that natural frequency is going to infinity. It's becoming a very low frequency money. Next year, after the halving, stock to flow is 120. The half-life of your economic energy in the money of Bitcoin goes to 100 years. In the year 2036, the half-life of your economic energy in Bitcoin becomes 1,000 years. In 2048, the half-life of your economic energy in Bitcoin is 10,000 years. Now, politicians want to tell you that this is impossible. Commodities and nature tells you this is impossible. But look at my chart here. In your lifetime, there is one asset that has a long enough frequency that you can actually expect to keep your money forever. This is economic immortality. When flow goes to zero, stock to flow goes to infinity, the money lasts forever. If the money lasts forever, you have hope. What is money? Perfect money is a way to escape the misery of the economic war that is depriving you, your family, and your company of 99.9% of everything you have with absolute certainty. And there is no amount of work, and there is no amount of trading, no amount of thinking that is going to escape this reality. You're going to have to find this solution.
50 trillion. That is really surreal to think about, but 50 trillion increase in the difficulty to create Bitcoin, right? Like, what if I told you, hey, guys, I think I think the difficulty to mine gold is going to increase by a factor of 50 trillion. What do you think's going to happen to price? Okay, Michael Saylor recorded that conversation in 2023, mid-2023. Okay, from then to today, it has gotten 60% more difficult to mine Bitcoin. Hash has increased by 60%. Okay, so it's no longer 50 trillion. It's actually more than 50 trillion, right? And even though it's a little outdated, the number, it proves the point that it's perpetually getting more expensive to produce Bitcoin indefinitely. Okay, and that is the design. I often say online that anyone that's criticizing Bitcoin, anyone that says, oh, Bitcoin's a scam, Bitcoin's a fad, Bitcoin's whatever, I always reply to them and say, if you, or I tell people when questioning the validity of someone that does not like Bitcoin, when questioning the arguments, you have to ask them, do they understand what the difficulty adjustment is? Like not what their opinion of it. Can they technically understand what it is and how it works? That is extremely important, because the difficulty adjustment itself is one of the tent poles for the backbone of Bitcoin. And most people going on TV or telling people that Bitcoin's a scam or it's a fad or it's a Ponzi collapsing to zero, whatever, with nonsensical headlines like they have been for over a decade, if they're out there saying that and they can't on a technical level articulate what is the difficulty adjustment, how does it work, and what is the argument for it and against it. If even opinions aside, if they don't even know what that is, you should not take their opinion seriously. They've not done any research into Bitcoin. They don't understand any of the potential value of Bitcoin. They don't understand the argument. These people will go out there and have these long rambling posts and articles and speeches online or on television, mainstream television, and they don't even know what that is. Some people, I know this might sound extreme, but some people are just deer to headlights. Like they don't even know what that is. They haven't even heard of it. It's amazing. It's preposterous. And so the point is, that's what's important to understand with Bitcoin. Bitcoin requires a perpetually more and more amount of electricity to produce, right? This is the big deal with the halving, right? People talk about, oh, the Bitcoin halving happens every 4 years. Really, the way you can think of it is that cost to mine Bitcoin doubles. I mean, kind of, I know not literally technically, but that's the idea, right? Is that basically Bitcoin is programmatically designed to require more electricity to create perpetually without the control of any human being. And so therefore, as long as you think in the future, people are going to want electricity or things that you can convert into or out of electricity, then you could take the speculative bet that it's going to get more expensive, right? Oh, but I can't eat electricity. It's like, yeah, okay, but I can't eat gold. Okay, I can't eat gold, and yet it's still valuable, right? Yeah, I can't eat Bitcoin, but I want electricity, right? I'm recording this on electricity. You're watching this on electricity, right? You can't eat dollars too, for that matter, right? I mean, the point is that it's not if you can eat it or not that matters. What's important is, does it take energy to produce? It doesn't matter if it's dirt trying to get to gold or it's electricity trying to get to Bitcoin. If it's going to get more and more difficult to produce said thing perpetually, you can take the reasonable bet that in terms of everything else that do not get as difficult to produce as fast as that thing, that is, the price is just going to continue to rise indefinitely in terms of all those other inferior assets here. So I think that's a really important point to make. And as Michael says, look at the chart. Bitcoin's been around over 15 years now. It's gone from less than a penny to 10 pennies to $1 to $10 to $100 to $1,000 to $10,000. Now on its way to $100,000. It's going to $1 million to $10 million, $100 million, $1 billion, $10 billion, $100 billion, $1 trillion, upwards, indefinitely, perpetually to the right, both in nominal and in real purchasing power. That is the winning strategy. To people that don't understand that it all comes down to energy and instead look at things through a political lens, they're not going to understand why Bitcoin's skyrocketing. Like Michael said before, there'll be 1% of days or less than 1% of days where Bitcoin doubles or goes up, a lot. And people will say, oh, wow, that makes no sense. Bitcoin's a bubble. It's going to die. It's going to collapse. That was me at one point. It's a scam. Or as Michael Saylor himself said back in 2013, it looks like Bitcoin's going to suffer the same fate as online gambling. Obviously, he's changed his mind. Obviously, I changed my mind. And most people also are going to change their minds, right? Basically, people are going to go from, instead of looking at it through a political lens and thinking, why is this thing just skyrocketing up and up? 90% of the time it does nothing, and only 1% or less than 1% of the time it just does something. Why is it doing something? It's not backed by anything. It's just random. But what they don't understand is that it all comes down to energy. Bitcoin is repricing everything else, everything in the world simultaneously, right? And this is what people don't understand with all their other assets. I'm not here talking about some stock somewhere. I'm not here talking about some other commodity or some other thing. I'm not here pumping gold, even though I'm using this gold coin as a prop. I'm not pumping. I'm not talking about it, okay? Because Bitcoin is in a competition with every other asset simultaneously. Your house, your stocks, your bonds, your cash, your diamonds, your car, everything that you own, Bitcoin is in a direct competition for its monetary premium. It's an economic war. Granted, it's in the economic world and it's in the free market economic world. Thank God it's not in the analog world. And that's the whole point of why we're trying to accelerate Bitcoin adoption and move away from political currencies, because political currencies often deteriorate into analog physical war and violence. I would much rather have the monetary war of Bitcoin than an actual global war or international war fighting for who gets to control the political currency. Just let Bitcoin win the economic war, right? And that's an important point to make here. That's what Michael's showing with these charts here. Bitcoin is winning. All these other forms of monetary premium are collapsing in terms of each other, some more, some less, but all of them in terms of Bitcoin. Bitcoin is repricing all of them because it is a sole victor without a general. All these other things are not being victorious, and they all require human oversight. They all require generals. They are not constant every day, 24/7, 10-minute blocks, block by block by block, requiring more and more energy to produce. That is why Bitcoin is so powerful, and that is why, as Michael Saylor is saying, you're looking out for the next 1,000 years, 100 years, 10 years, 5,000 years, it doesn't matter. Theoretically, if Bitcoin continues to have a finite amount, if it continues to be repricing everything else perpetually, is perpetually going to be a good buy if you're optimistic on the future of the human race.
What's the winning strategy? There's only one winning strategy that I see. It's hold the best money. And if you hold the dollar, which is the best currency, you're going to zero. If you hold a weaker currency, you're going to zero in a few years. Gold is a sort of better money than the currency. Stocks are a better money than gold. Bitcoin is a better money than the stocks. But let's talk about this a bit. The conventional organization, company, investor, they think the S&P index, they think corporate equity is the best money. They have monetized it, and that's what they're using. And so I wanted to break down what corporate equity looks like versus Bitcoin. You know, the traditional return of the S&P index is about 7% a year. Well, Bitcoin should, in theory, return 14% a year. It's returned a lot more. It's returning 40, 50% a year over the past 3 years and much higher over a longer period. But I want to lay out the reason that companies don't work as well as perfect money or digital money. First of all, you've got the dilution that comes from management. The management's going to pay themselves 1% of your return every year. You've got the risk of labor. Companies unionize, they have to pay labor. The cost of labor keeps going up. It's another 1%. You've got competition. There's going to be someone that's going to produce more gold or more iPhones or more something, more computers. It's going to cost you another 1%. You've got technology. You had a really good camera business, and then the camera becomes software. It's going to cost you 1%. You've got regulation. The EU is going to actually fine Facebook or Google for doing something on the web. It's going to cost you 1%. You've got taxation. If I can locate your employees, locate your management, locate your company, locate your headquarters, it's going to cost you 1%. And then you've got war. And the war may be a hot war where you've got a tanker and I blow it up, or it may be an economic war like a tariff, and I'm just going to put a 25% tariff on you. Companies have all those risks. If you ask what's the cost of it, about 7% a year. What you can expect is over time, over 100 years, you're always going to pay the 7%. Now, what's the implication of getting a 7% yield versus a 14% yield? Because Bitcoin actually avoids that. How does Bitcoin avoid it? The Bitcoin virtues are we replace management with cybernetic control. The software controls the system, not people. The software does the work for free. I replace labor with a digital system. I replace competition with an immaculate conception. There's only one Bitcoin. Satoshi gave it as a gift to the world. There's no competitor. There's no second best. Why? Because someone created this, gave it away to the rest of us without any beneficial interest in it. That's what makes it unique, irreplaceable, special. That instead of technology risk, like the iPhone 15, Bitcoin is just money, 1/21 millionth of everything there's ever going to be. It's not going to actually obsolesce. It's immortal product. In 1,000 years, you're going to want to own 1/21 millionth of everything there is. In 100,000 years, you're going to want to own 1/21 millionth of everything there is. That's how you escape the competitive downdraft, and that's how you avoid the technology destruction. And of course, with regulation, taxation, and war, by being a digital asset, you're living in cyberspace. You can't destroy it. It's indestructible, it's incorruptible, it's global. Bitcoin's going to duck the exposures of these other systems. So what's the implication of that? If you had $1 million today in your company or in your family, and you hold it in cash in the world reserve currency at a 7% inflation rate, in 100 years, you will have, in today's dollars, $977. You will go from 1 million to 1,000. You'll lose 1,000x. It's 1 divided by 2 to the 10th. If you take all your $1 million and buy government bonds yielding 3.5% interest, you're going to have a 3.5% negative real yield. Carry that for 100 years, you're going to have $31,000, 3% of your wealth. If you're brilliant and you invest in the S&P, You're going to have $1 million. You'll have the same value, the same wealth in 100 years you have right now, but no more. If you take half of it and invest it in Bitcoin and the other half in the S&P, you're going to have $512 million. And if you go 100% Bitcoin, you're going to be a billionaire. All you got to do is flip your $1 million into Bitcoin, hold it at 7% real yield 100 years, and that's the money you have times 2 to the 10th. And so you can see in a very simple way, there's a winning strategy, there's a losing strategy. Every other strategy is, the trading, the investing, is just a waste of time. You could ask, what about the real world? Here's real world in the last 2.5 years since MicroStrategy entered Bitcoin. Bitcoin has outperformed the S&P, the NASDAQ, gold, silver, and bonds. Bonds are destroying wealth. Silver is destroying wealth. Gold is destroying wealth. Bitcoin's crushing everybody. And you can say, well, what about MicroStrategy? All the guys on Twitter, they're all like Twitter trolls. Hey, you lost some money investing in Bitcoin. That's the MicroStrategy performance. That is your company on a Bitcoin standard. That is your family on a Bitcoin standard. See, you keep dollar cost averaging or Bitcoin cost averaging. And at the end of the day, it doesn't matter at what price you buy. What matters is you keep buying and you don't sell and you don't invest in the bonds, the silver, the gold, and the rest. The future? The world's in an economic war, but the world is beginning to realize Bitcoin is the superior asset. And as they realize that, Bitcoin is going to demonetize all these other assets over time. It's going to first demonetize gold, because gold doesn't make any sense, and then it's going to demonetize the other store of value assets, the real estate, the S&P index, the bonds. And so you're going to get a 30x bump as we demonetize gold, but there's no reason why you can't have a 500x increase in today's dollars by demonetizing these other things.
500x. Let's take a second. A 500x. Bitcoin's price when he recorded that was $30,000 in mid 2023. Okay, a 500x from there, that's $150 million per Bitcoin in 2023 dollars. So whatever $150 million could buy you in 2023, that's what Michael Saylor is implying from that specific moment on that stage there. That is what he's implying. But let that sink in. If you're still trading after you heard that, and you think he's even fractionally perhaps on the right trajectory, that's something to think about. By the way, that would make Michael a trillionaire. In nominal terms, right? Well, actually, no, pretty much close to real terms too. That's crazy. But yeah, it might, in real terms, make him a trillionaire, and in nominal terms, he might be a quadrillionaire, a quintillionaire, or something even more, right? A decaquintillionaire, or something. It's preposterous, right? The point is, Bitcoin is designed to appreciate forever because it's designed to require more energy to produce forever in terms of everything else. And so if you're pricing Bitcoin in terms of energy, or you're pricing Bitcoin in terms of productivity, it's only going to be worth more and more and more. Bitcoin in US dollars is an oxymoron. It's like trying to price a locomotive in terms of horses. Okay, the horse literally can't do what the locomotive can do, right? It's like trying to price Elon Musk's Starship in terms of the home rocket I can launch in my backyard, right? It's like they're not priceable. Oh, well, you can compare the amount of energy that one exerts and compare that, and compare it. It's like, yes, but the mission, the objective is not priceable. One gets to orbit, the other one doesn't. It's priceless, right? Bitcoin is priceless in terms of gold. It is priceless, especially in terms of dollars. And so if, speaking of something that's very, very valuable, if you want to meet these people in person, if you want to meet the future millionaires, billionaires, potentially trillionaires, like Michael Saylor and the many other wonderful people. Last year, this conference that we're reacting to with Michael in Prague in 2023 had lots of the most important and famous people in Bitcoin's early days here. Michael Saylor, obviously. Adam Back, of course, one of the only people on the planet to be mentioned in Bitcoin's white paper, right? If you want to meet people like Michael Saylor, like Adam Back, like Robert Breedlove, or the numerous people there, I will also be there. If you want to meet them, again, you should click the link in the description. You can use my code Luke10 for 10% off. Like, yes, I'm trying to get you to go because I want to meet you, and it's going to be a fun time, and you get to hang out with us all. But I'm also saying this because, hey, if you use this code, you get 10% off. I get a little bit back too, but hey, might as well save you some sats, right? Save you some energy. And you can save more by paying in Bitcoin. You get another 5% off there. So if you want 15% off your ticket to this conference to see what amazing speeches, presentations, and discussions off camera are going to occur in person, you should consider getting a ticket. You should consider going out there and joining. It's going to be a really good time.
And I'll end with this thought. We have laser eyes because laser eyes say focus on what you can change, save what you can save. In this particular case, you can make Bitcoin a success. You can tell the world about Bitcoin. No country can stop inflation. Nobody can stop inflation. I can put you in charge of the world. You cannot stop inflation. 99% of the companies, they cannot outrun inflation. 99% of the workers, they cannot outrun inflation. 1% may beat the market by skill and luck. Don't assume you'll be the 1%. Everybody can buy Bitcoin. So, buy Bitcoin. Thank you.
Consider buying Bitcoin. If you don't own any Bitcoin yet, consider buying some, even if it's just a little bit of energy, right? You have to start somewhere. You might as well get off zero with a little bit. And once you buy Bitcoin, you now have to consider, now that I have transitioned my energy from an inferior energy storage system into a superior energy storage system, the question is, now where am I going to store that energy? The fundamental problem you're focused about and trying to solve right now is having an inferior energy storage system into a superior energy storage system. And now that you're having to keep track of it, what are you going to do, right? Good. You've upgraded to gold. Where are you going to keep it? You're going to put it in your house safe? You're going to put it in your backyard? You're going to put it under your pillow? What are you going to do? This is why I work at the Bitcoin Advisor, because it's really important to not have single points of failure. The Federal Reserve is a single point of failure for the US dollar. You've fixed that now. Congrats. You've gotten Bitcoin. But you have to keep in mind, what happens if something happens to you? What happens to your wife? What happens to your kids? What happens to your business? What happens to your future if you forget your keys? All right. How do you protect yourself against losing the gold? How do you protect yourself against someone breaking in and stealing your gold out of your house? How do you protect those things, right? How do you protect your seed phrase? How do you have an estate plan for your future generations? So if you want to have assistance in learning about how to protect your precious Bitcoin that is going to increase in value perpetually, that this is going to be a perpetually rising problem for you, right? If Bitcoin does a 500x in purchasing power, you're probably going to want an upgrade, or at least a diversification to an upgrade of a better custody solution. Okay, I'm just saying you might want to think about that. And if you don't, there are going to be lots of other people that will. So if you want help thinking about how am I going to make sure my Bitcoin custody is set up so I'm protected against lost keys, against theft, or against nation state attacks, and ideally minimizing my tax bill and this and that and that and that. If you want help thinking through what are my single points of failure and how can I maximize my efficiency at stacking sats, click the link in the description. I'd be more than happy to help. I work at the Bitcoin Advisor. This is what I do all day, every day. I help lots of people figure out how to get as much Bitcoin as possible and how to keep as much Bitcoin as possible, because that is going to be the problem people have. We're only 15 years into Bitcoin's life, and millions of Bitcoin have already been lost. And so you have to think about that. How many more hundreds of thousands, if not couple million Bitcoin are going to be lost? Okay. We are in the ancient days of Bitcoin's adoption. We are still in the infancy days of Bitcoin's adoption. Many coins are going to be lost. Many people are going to have them stolen. Many people are going to make unfortunate errors for losing their keys and not passing on to future generations properly. So it's my hope that in this video today, reacting to Saylor, you, number one, consider buying Bitcoin. Number two, click the link in the description. Consider joining some Bitcoin event, hopefully this event in Prague in 2024. And then third, please keep in mind, watch your single points of failure. Make sure you're protected, because the new single point of failure is yourself, and that's okay. But you just have to keep these things in mind. So click those links in the description, check it out, and I'll see you in the next video.